Folks from Hong Kong. She is Managing Director, Chairman, Chinese Equities and Commodities, J.P.Morgan Chase. Jing Ulrich, good morning.
Good morning. Thank you for having me.
Well, it's wonderful to have you here, Jing. The last time we spoke to you, we saw a correction. We've bounced off the bottom. What should be our enthusiasm for Chinese equities? Better economy, but do we assume a rebound in Chinese equities?
Well, last week was a volatile week. The Chinese A-share market corrected for several days, but towards the end of the week and today, the market basically recovered. I'm referring to the Shanghai Composite Index, which has really become one of the most watched indices around the world. Even though very few foreign investors can actually invest in the A-share market, interest in China is very high. People are watching the stock market, they're watching the economic rebound, and they're asking the question, how sustainable is this recovery?
Ms. Ulrich, when you look at the cross-section of Chinese sectors, something we don't too often, is there one sector in particular that's remarkably attractive?
Well, the sector that's most attractive in the current environment is basically domestic consumption. Anything that investors can buy to get exposure to the rapidly recovering domestic consumption will be very attractive. So I'm referring to names such as infrastructure companies, I'm referring to car companies, home appliance makers. They're all benefiting from this very strong economic rebound.
Well, you're right about how the Shanghai market has become important to everybody. It was a major event a week or so ago when it bounced off a low. What about the longer-term view? Is all that selling behind, and is the Chinese market going to keep moving higher?
Well, if you look at market fundamentals, we're looking at corporate earnings set to recover in the second half of this year. The economy is enjoying a very strong momentum. However, the A-share market in Shanghai has been always very volatile. That is because retail participation is very high, around 70 to 80%. So that market is very much a high beta, very volatile market. Irrespective of economic fundamentals, the A-share market will remain very volatile. But if you look at Hong Kong, where many of the Chinese companies are listed, you can probably get stocks at cheaper valuations.
Over the past few years, we've been educated to think China raw materials. Is that still the way to go?
Well, China continues to have this insatiable thirst for raw materials, from coal to iron ore to oil. So if you look at the most recent numbers for commodity imports in the month of July, imports for iron ore and for coal both reached record levels. In the first half of this year, imports of metals reached record levels. So I believe in the foreseeable future and in the coming years and coming decades, China's demand for commodities will remain very strong.
Jing Ulrich, stay with us. At the top of the hour, folks, I want to speak to Ms. Ulrich about the flows, the greater flows within China, and particularly the idea of the Chinese themselves being able to pull money out of the Chinese system and to invest in broad.